Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Wednesday and the treasuries are already going a little bit wild here. Like right off of the open, they just kind of took off like a rocket ship. We are now back to some of these lower 3.9 levels that we were at before yesterday. So, and the interesting thing here is if we come over to the charts, give me a second here. I gotta find the correct one. Where are you? There you are. So when we look at the S&P 500, they took a pretty big dip yesterday. It was pretty ugly, right? But then when you look at the treasuries, well, I mean, they fell yesterday, but not too much. There was a little bit of an extension overnight, but then they're retracing it, and we're actually pushing up here at the moment. So it seems that the equity market was more concerned about what Chairman Powell said yesterday than the treasuries are, which kind of suggests to me that the treasuries think that things are fairly priced right now, whereas the equity traders were kind of having this rosy scenario that didn't actually match reality. So maybe they're coming in line. That does not necessarily give us a trade in the treasuries. We should be careful about that. Here's oil. Oil taking a bit of a dive yesterday, despite some analysts looking towards oil moving up here in the near future. Like gold and silver took a pretty big hit yesterday, but not new lows, not quite new lows. And yeah, we come out here. The real story is the freaking dollar. So Bitcoin just got destroyed, right? New lows overnight, but the dollar to 105.6 right now, and I believe, let's see here, let's come back here. I believe that is new. Oh no, not quite. We were up at 113, but it is new highs for the year, so that's where we're at. And then here this morning, we just get US trade balance here in about 5 minutes. Nothing too big. Oh yes, we have US ADP employment.
Barkin says the labor market has been unbelievable.
So the ADP employment change was 242K versus 200K. That's interesting. Well, but that was not what drove us here. No. Because that happened at 6:15, they moved down, and then we got this really strong move the other way. That ADP employment change would really strongly suggest that the number is going to be good, and that would cause treasuries to sell. So what's causing the buying here? Fed's barking. The labor market has been unbelievably resilient. High inflation means that the Fed still has work to do. Fed swaps upgrade. No. It's got to be something that Barkin had just said there, I think. Yeah, so let's read this story on Zero Hedge about it, okay? ADP reports wage growth slowing despite job claims. After tumbling last month to its lowest in 2 years, blamed on weather, ADP employment report was expected to show a rebound in February, adding 200,000 jobs. The actual print was even higher at 242, with January's revised up 119K, so that's pretty aggressive. Large companies dominated the beat. Business services and construction sectors saw job losses. ADP's chief economist Nella Richardson said of the January weakness, we saw the impact of weather-related disruptions on employment during our reference week. There is a trade-off in the labor market right now. We're seeing robust hiring, which is good for the economy and workers, but pay growth remains quite elevated. The modest slowdown in pay increases on its own is unlikely to drive down inflation rapidly in the near term. However, pay growth for job stayers slowed to 7.2% in February, the slowest pace of gains in 12 months. Pay growth decelerated for job changers too, falling 14.3% from 14.9%. As a reminder, ADP has dramatically underforecast BLS's official job gains for months. Equity bulls better start hoping for a big ugly print in payrolls soon, or the Fed's hawkish dreams may come true sooner rather than later. All eyes now turn to JOLTS data and the potential for a data miss. So, JOLTS job openings is at 8 o'clock. That will be the same time that Chairman Powell starts speaking today. And again, with Powell, it's a circus. I hate it. Yesterday was just a mess. Elizabeth Warren sucks. What else? What else would be important for you to know? The really important thing to know for your trading is that Elizabeth Warren sucks, right? I'm really curious though, still, why we saw such a strong buy here after we opened up. It only happened after we opened it up, while the stream's opening thing was playing. The opening stinger was playing. So that's really interesting. U.S. Treasury yields reverse course after initial climb following ADP data. Yeah, I don't know. This all seems hawkish to me, but that's not the way that the flow went. And when we get that confusing of a flow, it's best for us to just kind of sit back and watch it play out for a little bit. Yeah. So here we're going to get the U.S. trade balance news.
Minus 68.3 billion, minus 68.3 billion. That's higher than the forecast of minus 68.7 billion. Canadian trade balance 1.92 billion, 1.92 billion. Higher than the forecast of minus.
All right, 68.3 versus an expected 68.7. So not too big of a deal. Well, let's find a Ferengi rule of acquisition to read to you this morning.
So US January oil import price $70.09 a barrel versus December's $75.24.
Well, today's is number 7.
3%.
Keep your ears open. Yes, I guess that is what we need to do, right?
22 cents a barrel.
So we don't know what's going on. We're going to have to, there could be some good opportunity today. We need to stay vigilant. So with that said, let's all start yapping it up, and so that we get distracted and not take any good trades. Huh? No? Nobody's down with that. Okay, let's check a couple of things here.
So according to a US census, US crude oil exports fell to 3.51 million barrels per day in January versus the 3.84 million barrels per day in December.
Someone tell me why it seems like some of the bonds have stronger moves in comparison to the 10-year yields than the other bonds. Ask Nashja in Discord. Changes in the yield curve. This could be a mess today. Well, I think that what's probably going to happen is we're probably just going to balance out here at 05. Like, I'm not seeing action in here. that suggests that like a lot of people are coming in and trying to trade this and so forth, right? So the most likely scenario is that we form an area of balance at post meta order and just kind of chill here, which it just makes this even more odd, in my opinion. Well, we should check here. So the dollar's been moving around. Yeah, in fact, it was the dollar that flipped back down very aggressively, causing this. 6J didn't do anything too interesting. Gold still looks like on the downturn, but not too bad. NHTSA initiates investigation over steering wheels detaching from Tesla vehicles. You know what? There was a point where I was like, my next car, I think it should be an electric vehicle. I'm tired of paying for gas. It's getting too expensive, etc., 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 right? And now it's like I want it as far away from them. I don't even know if I would be able to set up a charging station in my house. I don't know if I'd even be able to get a charging station. So, yeah. And then it just doesn't sound to me like the Tesla vehicle is that well built. I'm tired of paying for gas, so having to buy a new car every time I need a battery makes sense, right? It's just, the whole thing is... one of the things that I think is like one of the funniest ironies about the way that electric vehicles went, and I tell you what, this kind of bait and switch happens all the effing time, right? So early on, it was like, well, yeah, but what happens when you run out of battery? Then you have to sit for hours to recharge and whatnot. And they're like, no, we'll just make batteries that you can just like, eject and then put a new one in, right? That's what they told us early on. And then what happened was that Tesla found out that it was easier and better for, well, not easier, but it was better for the car and all of these other things to like build the battery into the frame of the car so that you didn't have this big chunk thing that could be ejected. And so you can't do that. We have a friend who bought a Tesla. Something happened where the undercarriage got punctured and the battery got wet and died, and so he had to pay $22,000 for a new car. Wow. Oh, just $20K for the new battery. Yeah, because it's like it's built into the frame. Yeah, that's crazy. Yeah, and then the whole thing was like, everybody's like, oh yeah, we're gonna get like, I want the charger and all that. Like, I've seen so many YouTubers, right? Like YouTubers that are just taking off and having success, and so they're like, I saw Harris Heller do this. I saw Linus Tech Tips do this, right? They build the new house, and we gotta have a charger in our house, right? Most houses cannot accommodate a charger. Like, they don't have the infrastructure to have to charge their car. Yeah, the battery is everything. The rest is quite literally flimsy. Yeah. And that was the other thing, is that all of the videos I've seen about the quality of the interior and everything has been that it's not very good and they don't stand up to punishment. I don't know, it's been on my mind a lot recently. I don't have to drive my car very often. I have barely driven my car since the pandemic. And it's an Acura TL. It's like a 2000, a 2009 Acura TL. So it's a pretty old car at this point. And I looked on Edmunds, like, how much would I get for it? And it was only like $1,000. And I'm like, are you kidding me? This is like a great car. How can it only be worth that much? It was like, but the whole car market is screwed up right now, right? So it was kind of this. So for me, it makes sense to drive that car into the ground. Just drive until it just doesn't work. And I personally, I think it has a lot more life in it. I hope it does, at least. I hope it has a lot more life in it. When it's done, what do I do? Well, that's the thing, is that I don't really drive a whole lot right now. I just don't. We have the van, and the van is the one that we need to drive people around, and my car we hardly ever use. So maybe when that one dies and we get a new car, I just get like a really cheap Toyota Corolla or something like that, right? Something that's extremely efficient, but it's not an electric vehicle. On the other hand, if I get into a situation where I start driving more, and that is a possibility, I have to say, I've been the inflation has been putting pressure on me because my wife doesn't work right now, and it looks to me like there are opportunities to really increase my income. So I may decide to switch things up, work somewhere else, get paid a lot more. And I don't know what will happen with the stream, but we might have to adjust the YouTube channel. It might be that we don't do the stream anymore, and we might have to be doing a little bit more general content. I guess most of what we do on the channel is general content anyways, but I don't know, we might have to switch that up. But if that happens, then, and I'm driving more often, I'm driving to Salt Lake every day, I think I want something that is really good in the snow. So I think that means that I should get like a Subaru. There's a reason it didn't catch on in the 1800s when it's the 1800s was. Yeah, well, so yeah. Here's what bothers me about the electric vehicle push is that we don't have the materials for it. So we're all like, oh, oil is rare, oil is too expensive, it creates carbon emissions, so we can't do that. So what do? You're just pushing it all into lithium. So it's not actually, like, first of all, lithium extraction is very damaging to the environment. It's very damaging to the environment. And it's basically exploitation where they're mining it, because those people aren't getting paid shit, right? And it's like a humanitarian crisis over there where they're mining all of the lithium, right? It's not ethical in my opinion. And you're not actually reducing carbon emissions because it takes so much to get it out of the ground and to refine it and everything to be able to put it in your batteries. And then there's just not enough of it. So like if everybody really moves to electric vehicles, then the price for the cars is just going to skyrocket because of lithium. So you're not actually in a better position. Yeah, they're not. I mean, they're barely paid. It's like slave labor. Do you know why? Okay, so Magic, when Powell does testimony before Congress, it's a 2-day thing. So you tend to get 2 sessions of 2 to 4 hours each. And it kind of depends how long it goes. It depends because you get all of the congressmen and they get a certain amount of time, and sometimes they go over their time, but all of the congressmen get to ask their questions, and that's why the timing of it is a little bit uncertain. It was kind of funny yesterday when Powell was done speaking and market immediately bought up, but then later faded down, so like everybody got screwed yesterday. But well, I'm saying the pay is the least of what those people do. Oh, I see. Yeah, gotcha. The working conditions are awful. And like the one of the things that like bothers me about it is like they asked Elon Musk about it, and he's like, "Oh yeah, it's terrible. It's totally unconscionable. But like, what are you gonna do?" You know, it was like, it's not my problem. Well, I can't do anything about it. That was a little. That kind of rubbed me the wrong way. It's like, shouldn't you be like at the forefront, talking every day about how we need more ethical lithium extraction? But then that would probably destroy your company, wouldn't it? Yep. So So once I really started to learn more about it and everything since the pandemic, I've become very anti-electric vehicle. I think that we, cars are not really the major contributor to carbon emissions, and we're making our cars more efficient all the time. And so more efficient vehicle standards is probably where we should be going, and not buying electric vehicles. Like my understanding is that you generate more carbon by switching over to an electric vehicle than you do from driving a carbon car. Like, so in other words, if you want to be the most if you want to reduce your carbon emissions the most, you need to drive your current car into the ground first, right? But what's happened is the government gave subsidies to electric vehicles, and then it becomes a self-reinforcing thing, right? So this problem about that the market is not efficient. I still firmly believe, and I believe this during the whole pandemic and the whole time that Tesla was up, that Tesla was overvalued. It's like, don't try shorting it, but it's overvalued. It's not going to be worth this much in the future. And I think it's probably still overvalued. I think that you're seeing the government subsidies coming in and all of that, and at some point, electric vehicles are going to have enough saturation in the market that they can't justify subsidies for it anymore. And when the subsidies go away, it will collapse because it's not actually efficient. EVs are just external combustion engines. Your car ain't spewing CO2, but the power grid that charge it. Yeah. Well, I mean, in order for us to handle the demands on the power grid, because this is part of why they're having problems in California, right? They would have to burn a lot more carbon, right? Of course, we could get nuclear. I remember when Fukushima happened, I was so disappointed. Like, oh, this is gonna hurt nuclear, and that's what we really need. Because at the time, like, gas was expensive. I tell you what, though, something else kind of in defense of the Biden administration. I know I hate to have to say something that's kind of in their favor, but it seems to me, and maybe this isn't really actually in their favor, but it seems to me that the Saudis make oil a lot more expensive when it's a Democrat president than when it's a Republican president, right? When it's a Republican president, everything's all hunky-dory, and the price of oil seems to have a pretty major effect on everything else economically. And I wouldn't say that it was the only contributor in this time, but it was like a key contributor at a key time, to kind of set all this stuff off. Nuclear is good, but it takes long to build. Yeah. Well, I think that that's getting better too, though, Magic, because if we get these mini nuclear reactors that they're working on, that should reduce the time to make a plant considerably, right? Because the reason why nuclear takes so long to build is because you have to have this really high grade concrete that takes really long time to build. It takes just a long time to actually build the infrastructure for it. But if it's a small power plant, that means it takes a lot less time, and you can get these plants in like 2 to 4 years or something like that. But we'll see how they go. It's the same with like molten salt reactors. Oh man, I love nuclear stuff, and my father-in-law was a nuclear safety engineer, so you know I learned a lot of stuff about this through him, and then I get lots of stuff on TikTok about it. Molten salt reactors, those are really exciting, but probably not practical from a business sense, because the whole deal is creating materials that allow the reactor to last long enough, because the molten salts are very corrosive. So it's kind of like you build this nuclear reactor and there's materials on the inside, and then after like 10 years the materials have been eaten away, and then the reactor is useless. You can't use it anymore, and it's too expensive to like replace it, right? So those would be a long ways away. The good thing though is that China is putting a lot of effort into it, so I'm sure we'll get there one way or another. So we did have a little bit of a move up there. It looked like that drive higher, it was really driven. It's kind of odd. We saw some buying volume in the 5-year and in the 30-year, but not in the 10-year. But the 30-year like really came back there, and it really seems like something is going on here. Something really unusual is going on here this morning, and we're just not in the know yet. Okay, so I have a story here from Reuters. Last updated 14 minutes ago. Fed's Powell previews tougher rate hike path starting soon. Federal Reserve Chairman on Tuesday foreshadowed key elements of the central bank's upcoming rate-setting meeting. A half-point increase is on the table, and updated policymaker forecasts are likely to feature a high point for rates above the 5.1% in their last projections in December. Okay, so they're just reiterating what we already know, and what the like Goldman's analysts yesterday were telling us is going to be 5.5 now. So that's higher than the 5.25 they were doing before. Doesn't explain why we're getting the order flow that we are. Now, that said, with that we had that little push higher, it seems like the 10-year is kind of rolling over and turning down. I'm kind of tempted to just buy rates here, though. I don't think that I have a good justification for doing it. I mean, the volume is not, well, I guess we're seeing enough autocorrelated volume, at least in the 5 and the 30, to justify taking a short, but I would say it's not ideal. Doesn't seem ideal to me, and we just really can't explain these flows, and it's counter to the trend that we've had so far in the session. So, but I do kind of like it. So let's try doing some market making here, yeah. Because this is looking like a good spot for that. I may be taking this too tight. I don't know, because I've already got 4 contracts. The center might be 0.5 half. Oh, okay, so that was okay. Looks like the dollar's on the move again. So need to keep an eye on that. Okay. Good. Very good. Come on. Kill me. Kill me. Well, the pressure is there. It's pulling, but okay, there we go. I was like, I don't know. So if we fall back out here, because I'm thinking that they might. Well, okay. So 250 at 1/2 for me is usually a place where I like to kind of like sort things out, because then that gives me like 8 ticks of room to work with, right? But if they were to get down to there, why wouldn't they be going down to 111 even? And for that matter, wouldn't we be getting like a large meta order completely retracing the move? So I don't know if that target makes sense. I do think that if we let this run, that we should try and let it run on 2 of the contracts. So let's just let it churn for a little bit, because it might churn back up to my average cost, and I could try another contract there if it's still this. Yeah. Okay. Interesting. Dollar turned there. The music that I use is from streambeats.com.
Services Committee repeats written remarks.
It's music built specifically for streaming, so that it gets striked. And I'm using the Hype playlist. They got a bunch of different playlists, but I've just been only doing the Hype. I wonder when they're coming out with new music.
Submitted to the House.
I think that it would be about time for them to be putting some new ones out.
To the Senate Banking Committee.
It's really, so this area between 05.5 and like 03.5, I would say, is really slippery for some reason. And yeah, we had that really aggressive move up in the ZB, and it's like it's collapsing back in on it. Sounds like sharpened lo-fi. They do have a lo-fi playlist, which is a little different. This one is more hype. It's the Hype playlist, so it's kind of more hip-hop-ish. I like me some 808s. What can I say? There's some other ones that I really like their ambient, but I felt like for the stream that it was too low energy, you know? So yeah, I know in particular that 04.5, I really don't like the way that it moves across that. I kind of I'm a little bit nervous about taking 05.5. Maybe I'm trying to play it a little bit safe. Okay. So I think I was right to be a little bit concerned about that price that I had there, because they slipped right through it. But I got the fill, and now have a possibility of a down tick. We'll see if they do it. Oh, come on. Come on. Interesting. Okay, so the 10-year kind of giving us some signals that that there's some problems with the liquidity, right? Like it's able to tick up and down on very few contracts, and they're not stacking very aggressively behind the moves, and then it will like slip up or down 2 ticks at a time. Yes. Do you look at 6J for correlation or DX on ICE as an inverse correlation? So Blue Smurf, I have an indicator that you can that is a part of my paid indicator suite at speculatorseth.com. You get a free 2-week trial, and then it's $100 for a lifetime license. And what that indicator does, the synthetic dollar index, is it uses the FX futures on the CME exchange to synthetically calculate what the dollar index on the ICE is. So, and then I put that on. I have a chart of the 6E that I put that on. And then I use the 6J. I have the 6J over on my other screen that I kind of keep an eye on. Okay, so use trading technologies. Maybe I need to go write it for TT. I mean, you could make it for TT. But if you don't have that though, having a chart of the 6E and the 6J up gives you a pretty good idea of what's going on. Yeah, you can use the correlate. I mean, they're pretty heavily correlated, right? But they, sometimes there's like, I don't know. I don't want to say it's like the technical analysis of it, but there are things that you can see in the dollar that you don't see in the individual ones sometimes. I think a lot of it has to do with individual price levels, but it's like, something that I've noticed about the markets that I wish I had a way to like prove this, because it really does seem to me like the market cares about certain prices. It's like certain places you're more likely to see liquidity and back and forth movement and stuff. Those areas aren't very predictive of where it will go next. But there do seem to be these price levels that like the market cares about more, and you notice those levels in the dollar index more than you do in the individual currencies. If you only care about correlations, if you trade tick strike, well, so I'm not so sure that tick strike would be the best. Because if you care about correlations, you're going to have a ton of correlations up, right? And then that's kind of a little bit too much with tick strike, don't you think? I mean, the best way to do it is to have DOMs up, right? Because with a DOM, you can just look in one spot and you can kind of see them all moving out of the corner of your eye. But yeah, it's too much. Like, there's a certain amount of sound that you can get that it just becomes noise. I think that Tick Strike is a really good product, but it is not for me. You gotta have charts, but chart only tell you so much. But this is what I'm saying. Like one of the things that I think happens is that the market does seem to care about certain prices, and so retail traders will kind of notice that subconsciously and then turn that into the basis of their technical analysis. And so that would give a really good reason for why one might think that those would work, but ultimately when you look at the stats over a long period of time, that wouldn't work. And the retail trader just doesn't see that. They think that the reason it's not working is because of them, something that they're doing wrong, right? Yeah, like say DX breaks the high, you short bonds and vice versa. Yes. So the dollar has been really influential the last I want to say like the last month. We've seen a lot of moves where, well, I mean, this happened today, frankly. Like the treasuries had a really strong move up here, and it happened at the same time that the dollar index was taking a plunge, right? It was only coming back down to this price that they were here. They're not. I would say right now that the bonds and the dollar don't look very correlated to me, but they may be co-integrated. Actually, we could test that if we really wanted to. Shall we? It would take a little bit of power, but it's definitely, the treasuries are definitely more correlated with the 6J than the other currencies. But so co-integration is kind of like correlation, but what it kind of means is like, not that if this one goes up, this one goes down, but that this one kind of stays within a range of this one. And there are statistical tests that you can use to tell if something is co-integrated that I have on my NinjaTrader here. But it's kind of like an expensive indicator, and I would have to run it on the dollar index, which is pulling a lot of data too. And then it gives you a number that tells you if they're co-integrated or not. Because you can see the dollar is actually lower than where we were, but the treasuries still seem to be pushing to the upside. Correlation trading is not accurate enough on its own. So if you were gonna like do correlation trading like on its own, it seems to me that the guys that are doing this put a lot of effort into determining when statistically something is actually correlated enough to trade on, and so on and so forth. And I think you'd probably be right that if you were to just trade the dollar index correlated with ZN on its own, wouldn't be good enough. Okay, so
a repeat of an earlier headline.
They did just breach a new high there. I think that means I have to puke this sim trade, huh? Yeah, that's what I do. I just wait for the correlations to come into play. Yeah, today's move though is I guess what I'm kind of thinking about is that hasn't seemed to be too useful today. You know what I mean? There's no way. Well, you as a human can tell which can in some cases make a determination about which market is leading the correlation, right? A lot of it is like, where is the money? I would always think about where does the money coming from and moving to, right? Because if like we're moving down in the treasuries, for instance, they're selling treasuries, right? Generally speaking, of course, there's all sorts of different reasons why people buy and sell the futures. But like if people are overall selling treasuries, right? What are they doing with that money? They just putting it in the bank and holding it in cash? Well, usually it doesn't work that way. Usually these large funds in particular immediately turn around and put it in a substitute asset, right? I'm short. Why have you not hedged it? I was thinking about just puking it there, but oh, okay. So why would I hedge it rather than just puking it? I'm not sure in this particular situation I see why I would rather hedge it. If I had a larger opinion about the spread, that the spread was gonna steepen or flatten, then maybe that would make sense and I could still keep on the steepener trade. But here in this situation, I don't see the point. But I could just get out of it and that would reduce my risk too.
Brent crude down by $1 a barrel.
In fact, it looks like that's the best I'm gonna get, so I will just take it off there and take the $200 loss. So, you know, on that one, so for me, like judging how well did I do on these kinds of market making trades. Well, that doesn't make any sense either, man. but why? Why? No. So okay. So hold on. I take a position, right? I'm short 05. It's wrong. Okay. I come around and I go long in a substitute asset. So I still have my trade on over here, but I'm long over here. And then if this continues to go, I might make money on this, and I might be able to recover out and make a profitable trade, right? But why wouldn't I just on the outright turn around and exit the outright or reverse on the outright? Right? So I think that if I was a really big trader, right? I think you were an INTJ. You know that those I can't even remember the name of the system. That system has never been shown to be able to like really make any difference in people's performance from looking at it, right? But you might be right that I am an INTJ. Yeah, Myers isn't good for. You're distracting me. You're distracting me. Okay, so if I'm a really big trader, I might come in and buy another asset because I know that me trying to exit this trade over here would have too much of an impact on the market, and by using this spread, I might be able to reduce my own market impact and get out of it, right? So that's one side of it, right? The other side of it is if you have some idea about what the spread or the correlation is doing, then that's another case, right? But if I'm just making an outright prediction that the treasuries are going to move up or the treasuries are going to move down, then it wouldn't end I'm small. Then there's not really any difference from doing that than from just exiting the outright or flipping my position around. And the advantage to doing that in the outright is that you're going to use less margin and less commissions, right? So because you don't want to exit on the edge of their rotation. Well, if you think that it's going to come back, I suppose. But then if it comes back, aren't you going to lose some on this one? So it still doesn't. You're still taking the same amount of loss. Right. So like if it came up here, actually, where was my average position from? It was a 06. It came back quite a bit though. I mean, look, we can try it, and I think that I could be able to explain what I mean here. I'd have to rearrange a little bit to do things. So let's see here. What do I think? I kind of suspect that we're steepening today, but so I'm not sure you understand the case that I'm making here, because your responses don't seem to be responding to what I said, right? So if I have a long in the 10 year, let's just say a short. So if I'm short in the 10 year and we start moving up, right? And I come in and I buy in the 5 year to hedge it, right? So theoretically at that point, I am now quote unquote hedged, right? Okay. So now no matter how it moves, unless there's a change in the spread itself, the profits from that point forward should cancel out the losses, right? So if we continue to move up and I've made money on this thing over here, right? Now what? You say scalp this one. Okay, well, then I take this off and now I'm no longer hedged, right? So like doing that does not have an appreciable difference from just flipping around on the outright, right? Because if you do it over here, right, I hedge myself. Okay, now I don't lose any money if it moves up or down, right? Well, yeah, but the same thing would happen if I exited over here and I just closed the position, right? Get your trade. Aha. Okay. So now. Okay, but again, so first of all, what you're doing is you're doubling down. That's dangerous, right? But why not reverse and just take as twice as large of a position when I reverse, right? So it comes down to, what is the point of a hedge? The same thing. What happens if you were wrong on the reverse? The same thing that would happen if you were wrong on the hedge, right? You reverse and it comes back down, you're going to lose twice as much on the one that you hedged. Yeah, it's not actually a hedge, my friend. So ask yourself this question. What is the point of a hedge? Right? What is the point of a hedge? The point of a hedge is to reduce risk and or to help us control which risks we're actually exposed to, right? So if I have an outright position in the 10-year treasury, then I am exposed to the risk of it moving up and down. I'm exposed to the risk of its correlated instruments moving up and down, and I'm exposed to a change in the spread, right? If I come in and I think that I think I know what the spread is going to do, then I can come in and I can take a spread trade. And now I'm no longer really exposed to the risk of them moving up or down so much as I am exposed to the risk of the spread changing, right? And so the hedge has allowed us to better define what risks we're taking, right? But if I'm just interested in being exposed to, are the treasuries going to move up or move down, and I'm assuming that the spreads aren't going to move, right? Then taking a trade over here is no different from doing the same stuff over in that outright. So I could turn around and I could buy twice as many in the 5-year, but I could also just exit this position and reverse with 2 contracts instead, right? So, but you will see professional traders do this sort of stuff. And why would they do that sort of stuff? Well, so there could be some situations where, because you're so large in the impact that you have on the market, it's cheaper for you to exit the trade by hedging it than it is for you to just dumping the volume, right? So that's the first thing. And the second thing is that they might have an actual opinion on the spread, right? The purpose of a hedge is to turn a small loser into a big mess. So yeah, so in this particular instance, the reason I'm doing it on a sim account is because I'm a little confused about what is driving the action today. So I'm not quite sure why we've been seeing buying. So while I think that we probably I feel like we should be selling today, but I don't think that I really have a very good trade on taking it short that I'm willing to take on my live account. So instead what I'm doing is I'm saying, oh, well, let's practice. So I'm going to practice market making, right? So in that particular case, we were wrong and it moved higher. At what point do I just reduce my risk? Well, we kind of broke a new high and came back, and then I took it off, and look, we're back up to those highs. So I did the right thing. I think that, well, you know what? The amount of loss that I took on it wasn't too bad either. So I think we're okay. I think we're okay. So that's why I did it the way that I did. Now, we could try taking a spread trade. If we're going to continue moving up, then I think that the trade is you buy the 5-year, right? I mean, the 5-year seems to be pushing there. I'm kind of thinking about adjusting things so that we can do that. What do you guys think? So I think I can get some more room there. And, well, let's just see how much we need. Let's just see how much we need, yeah? That's okay. Oh man, we really need a lot of space though. I wish when you're resizing columns on Jigsaw, I wish that you could decide which side of it was taking, because I would rather close up these quarter points, right? Man, that was a lot of space for one order column. All right, we'll do that. Yeah, that gives us enough space. This, I could say, okay. All right. Now I think we got it. Then I need to figure out what's the correct ratio for this one. ZFZB is 4-1. So let's just try 4-2-1. Oh, whoops. That took 2 over there. Okay, now we're good. Now we're good. Yeah, this is a demo count. Do I have, yeah, I need reduce smart Q fonts. I have reduce smart Q font on this one, don't I? Yep. And this one, I have it too. Hmm. Okay, so we've moved a little bit, right? And when you look at the two positions that I have oh wait, I forget, how do I turn on? Oh, I forget how to do it. Well, anyways, I've made basically $31 on this spread so far, right? The ZB came down a little bit more. I've made 128 over on this side, and I'm maybe losing 62. So I've made like 2 ticks basically, right? So now what? Well, if I wanted to, I could close this side. If I said that we were going to go down, I could close this side and let this side of the winner run, right? But I could also close it all and go short over here. That would have the same effect, right? Oh, you gotta go. Right, so that's why I'm saying that, like, the change that you get from hedging doesn't actually change your risk profile, right? Except for it changes your risk profile in regards to what your risk is to the spread, right? Not the outrights. Yeah, and add to your winner. Well, I do if I really think there's a good reason for it to run. Today though, I'm honestly at a loss as to why it's behaving the way it is. It's really odd order flow this morning. Now, on that point, let's think about if we were to keep this spread trade, because this was kind of more of an example and an experiment. What do we got going on right now? Because we are steepening. It seems like the trade is going okay so far. All right, but we got Powell speaking, right? Powell is going to speak. So do we think that we're going to steepen through Powell's testimony? I think no. I think that I'm more concerned about the risk of further flattening like we saw yesterday. So that means that we might want to work something out and taking a profit on this before the top of the hour, right? Could be a markup ahead of a dump. I don't know. That's not a scenario that I typically worry too much about, because, like, how would you know and even see it? But the changes that we've seen in volume kind of suggest that it could be just about anything, right? Because we've only had like a 4,000 net contract change here on this through the whole session in the 10-year, for instance. So. Okay, so interesting. So now we're getting a little bit of flattening coming back in, and now we're at break even on the trade. Yeah, see you later. Reminder, U.S. equity index roll is not tomorrow. The official roll date has been moved to the Monday session. Oh. Okay, so I think what we can do here is we can say we'll take a profit there, and we'll take a profit there. So we got to be careful on this, because if that gets filled, then we're no longer hedged on this side. So if we had a further dump, that would be really bad for us, right? Yep, now you have execution risk. Yeah, you're right. See, this is where I find why I haven't done a whole lot with the spreads and everything, because it seems to me like the real thing is if you go for a flattener, you tend to win, right? You go for a flattener, you tend to win, but otherwise you're doing something really complicated for not a whole lot of benefit. Okay, so I could try and exit right there. That should have gotten it out. Okay, cool. So I did make money, but it was only $31, right? And it looks like if I could have been a little bit more patient, I might have stood a chance of getting out. Oh, there you go. I would have. Oh, well, cool. And I would have made 125. Oh, look at him moving. Oh, that's because the S&P 500 moved. That means it's time for me to stand up and stretch, huh? Stand, do it with me. It's a good thing to do. Unless you're trading the ES, then of course, you know, do your trade. Was my fly down? No, I don't think anybody saw that. It's better to lose to. could have lost some on that. It looks like if we had kept the trade on, that we would be getting something here. My gosh, this is okay. Bank of Canada with us live. Oh yeah. There is the Bank of Canada rate statement at the top of the hour today, isn't there? I don't know if this move makes sense though, man. Does this move make sense? I'm just realizing that I didn't turn my fan on. So I gotta do that. Why? What? Was there a piece of news I missed? My news squawk didn't say nothing. President Biden tweeted about Medicare. That's another. Do you think it's the Bank of Canada? Do you think that they're anticipating something from the Bank of Canada? Because that's, I mean, that's action that you typically don't see unless there's like breaking news, and I'm just not seeing it. So it sucks. You know, you notice how much it bothers me when we're in this situation, because I want to be the one in the know. I want to be the informed trader, but today we're not. It's kind of funny that it happened like immediately after I exited my position and everything too. Oh, this is really weird, guys. What do you think that was? It happened right at 7:30.
There is no need for OPEC to increase oil output to make up for Russia's cuts, according to CERAWeek.
The dollar just had like a big move. I am using Financial Juice, which I have an affiliate link for in the video description. Things that are in the video description are things that I use. So. I don't know, man. This is a little weird. Actually, it looks like I would have made money on the spread because the 5-year did go further than the 30, just not the 10. Oh, Powell's testimony this morning is to the House and yesterday was the Senate. Gotcha. Okay. I mean, that's some pretty aggressive order flow there, man. Market makers getting some pretty decent pullbacks there on it, though. Like they're letting it come all the way back. I really don't like the way this is trading, though. Like. You know, I guess the other possibility here is that they're expecting that the whisper has been that the JOLTS jobs number is going to see like a huge decline, that it's going to change drastically. They could be buying treasuries ahead of that. The top of the hour is going to be interesting, let's say. I'll get all of my order windows up in here. Yeah, the 5-year came back down a lot more there. So is that ups or down on the Bank of Canada? I don't know, man. I think that this is a situation where I should try to avoid having an opinion because there's some really strong flows coming through in the dollar and in the treasuries, and I'm not really sure what's driving them. So we kind of did a little bit of experimentation in practice. I think that was the right thing to do in this situation and not try and take an outright position. Almost anything could happen. It sure seems like the market thinks that there's something out here dovish. I don't know what it is. Could it be the Bank of Canada? If it is the Bank of Canada, then one would think that they think the Bank of Canada is going to be positive for treasuries, but we'll see. It could also be that we get again, so where's my thing? We get Bank of Canada rate decision, we get Powell speaking, and we get Jolt's job openings all at the top of the hour. So it's a really, really data heavy 10 o'clock. Wait, who's TIFF? What's TIFF? If you agree with TIFF, it's supposed to be a hold. G7 banks stopping rate hikes as well. I don't know. I guess the larger thing here is that I've been in on the rates going higher trade for the past week, and excuse me, my lips are really chapped here. And I'm way more interested in the short side, but that's just not the way that the flows are going today. Seeing gold on that last move up. So again, like the thing. Oh, Tiff is the Bank of Canada's governor, whose whole privately declared wealth is in the Canadian housing market. Really? Oh, I did not know that. That's one. You know what? I haven't been doing very good with my learning. I've been doing my machine learning book, but I have a couple of things that I want to memorize, and one of them is to memorize the names and faces of all of the major central bank governors. I don't know, still, I just keep coming back to the Treasury saw a really strong push up. Like, we went from -32 to -19. So almost to 15,000 net contracts buying to break new highs about a minute after the S&P 500 opened, and there was no news that I could see. It really looks like a news-driven move, and I can't explain it. So that's where I'm like, something's going on, and it's probably something that we have the ability to know, but I'm just not finding it, you know? Oh, it tried to do it. Hold on a second. Oh, it didn't work. I have this little Discord bot that I've been working on, and it didn't work the way that it was supposed to. I hate Python. There are some things about Python that I don't like. So the way I should say it. That's a silly bug. Restart it. Don't worry, the news will be made up by the market choice close just to justify the action. Yeah, I mean, in a situation like this, probably by the end of the day, we'll probably be able to make a pretty good guess at what happened. And in fact, by 8 o'clock, I think we'll probably have a good reason to say, oh, okay, it actually was this or that, whatever, right? I guess One thing that this is making me realize, though, is that volatility in the interest rate market has been really high this week, right? And so I need to be careful, because if I had taken a trade here in the 10-year, you know, could have been really ugly. So I really need to have a really strong thing to be doing this. And it might be worthwhile for me to think about, you know, being a little bit more protective of my profits. Like if I do catch a runner, to take the profit when it stops, instead of trying to let it run and run and run. I've seen that before, actually. Yeah, it's a comic pointing out the funniness of, like, lower interest rates helps the market, but then that's like, oh, the market is going too well, that means that there'll be inflation, and then that moves it down, and then it moves it back up, and it's like, how do you sort that whole puzzle out? Apparently, though, there is a way. There is some special math for how to calculate the end results of some of these circular references in the market. The guy on the TV is Warren Buffett not caring. You know what? He looks British to me. He looks British to me. Really round glasses, long nose. Well, it seems like the most clear move sort of thing that we have going on here today is that the dollar is coming down. That could just be mean reversion from the other day, but it's supposed to be mean cough himself out. I guess we can't really make a conclusion on how British he looks without being able to see his teeth, right? They have braces and stuff now. So one of the things that I find really I'm really interested in potential scientific discoveries that, like, we haven't proven yet, right? And there's often many cases where you'll see people talk about stuff on the internet and it's almost like a conspiracy theory, and it's just like they haven't proven it yet, sort of a thing. But those usually don't turn out to be true. But one that I find particularly compelling is that pressure on the upper palate of your mouth widens your head, and that the reason we have teeth problems is because our food isn't tough enough. So eat rocks. Yeah, well, not rocks, but like nuts. Eat nuts. that our diet used to be nuts and unprocessed grains and stuff, things that you really had to chew. I just read an article that braces are going to destroy your face and cause posture imbalance. So when you have kids, feed them like nuts and carrots and things that are tough and that they have to really chew. I feel dumb dealing with my chapped lips, but it drives me crazy. So bear with me here, please. So by the way, we're seeing a lot of level 2 activity and ticking around here, but we've been kind of stuck at 13.5. So it looks to me like a lot of speculation is coming into this market, but that the meta orders are gone. So that's a good situation for the market maker, not necessarily for us. So that's why, well, so apparently when you go and you look at skeletons of people from hundreds of years ago, they all have perfect teeth. Yeah. Excuse me. Oh, so my favorite, I put most of my trades in the micro 10-year, Brando. And I do have some background. I mean, I'm a computer science guy.
At 10 a.m. Eastern
I'm not as
the rate
deep
decision.
into some of the
Forecast
data
noted
science
5.5%.
stuff
The Bank
as
of
I'd
Canada
like.
rate statement and US job openings.
Right now, I'm doing a little bit of stuff with Python Pandas,
Prior
so
0.012 million.
I haven't gotten too
We
deep
also
into that
covered
yet.
Comments from Fed Chair Powell, who appears before the House Financial Services Committee to deliver. the
Reserved
second
skeleton
day
get their
semi-annual
teeth
testimony to
relodged.
Congress. Just seeing.
Oh,
some
really? So you're saying that maybe they didn't have perfect teeth, but then over time when it turns into a skeleton, they go to perfect teeth?
throughout 2023.
that
Given
what
that
you're
the
saying?
Bank of Canada forecasts headline inflation to
That's weird.
6% this year, and its preferred inflation measures appear to have peaked. However, continued tightness in the labour market, keeping wage growth strong, makes policy rate cuts unlikely this year. Seeing from Wells Fargo, in January, the Bank of Canada raised rates by 25 basis points, but also said if economic developments evolve broadly as expected, it would hold interest rates steady while it assessed the impact of its cumulative interest rate increases. That suggests a relatively high bar to resume rate hikes, and one we do not think has yet been met. To be sure, recent months have seen some blockbuster
They be icing.
reports, including the
I don't
employment gain.
know. The people that promote this theory say that old skeletons don't have crooked teeth. That people didn't have crooked teeth until the modern diet came around in like the 1920s. And before that, crooked teeth were not really a significant problem.
Quarter over quarter annualized pace.
Oh yeah, Brando, I've done some stuff in art. So I have an indicator that, well, not an indicator, I wouldn't call it that, but kind of, it's kind of like the Buffett indicator for cryptocurrencies. I post it at patreon.com/speculatorseth, although I'm kind of winding it down. Like, I would prefer to just close it down. I don't know what I should do with that model, because I feel like it's worth a lot, but I don't really like the cryptocurrency market right now. And anyways, this is this whole big long thing. But and I wrote that in R. Well, R is, so the thing that's cool about it is like R, it does all of the things that like you do with Python pandas and so forth, but it's like it's built into the language. So there's good efficient syntax for it. It was very, very flexible because it was all kind of thought out from the beginning. And you get a lot of schools doing stuff for it. So you get a lot of research back kind of models and stuff that you can use for it. But it seems that for whatever reason, people have gone with Python. I really don't feel like that Python is the best language to do this sort of a thing in, but they make it work. So I've kind of been more focused on Python lately. I've been doing a lot of programming in Python, just doing like little scripts and stuff, but not hard data analysis per se. But I would like to spend more time on that. What I really want to do is I want to take some of the trading strategies that I made based on order flow, the automated strategies I made based on order flow, and try to apply hidden Markov models on top of them. Because it seems like there are some regime changes in it, and I want to figure out what that's all about. Never heard of that Twitch streamer, huh? Sometimes I wonder how this stream would have gone if we had focused exclusively on Twitch rather than having the YouTube. I don't know if I would have made as many YouTube videos, but so I guess I'm glad that I did it that way, but I do enjoy R. I do Python in R and would prefer do those types of data science functions in R. Python is more for machine learning. Well, yeah, but that's like the whole thing. What I would like to see, you know what excites, does it excite me? I don't know. I think that Rust is a really interesting language. I really think that the world would be better off if C++ died off and people used Rust.
25 basis.
That's kind of like my position.
Unchanged.
And from a programming, if you're a programmer,
just at 10 a.m.
check out Rust, because if you want to like get involved in a community and like build open source things and be in a place where like you can make
forecast 10.546
real contributions to that community. The place right now is Rust. It's still a really small community where you can have a strong influence if you just are really active, you know.
To Congress. Just seeing some more analyst remarks.
Why not stream on both? So we used to stream on both, and what we found
interest rate hikes,
was that nobody watched on Twitch.
To digest the impact. Since its January meeting, growth has disappointed and inflation has slowed more than expected.
Today's speech is just part 2 of congressional testimony, this time speaking before the House.
Exposed to higher rates, and we see downside risks to growth, with rate cuts on the cards for the fourth
quarter. Yeah, so we used to restream to both of them, and when we did find people that happened to cross the stream on Twitch, they would just move over to the YouTube, and we always had more viewers on the YouTube. So we just kind of stopped streaming on the Twitch. If I had said all you guys on YouTube go over to Twitch, and we had started with 24 viewers on Twitch, who knows? Because especially during that whole GameStop thing, there was some Twitch streamers that did really, really well during that, right? But that's kind of the thing that's been interesting about our channel. So first of all, we have really good content on this channel now. Like, honestly, again, I keep bringing this up that like I might have to change things around and go into a period where we don't stream for a little while because of change in day job. But and then maybe come back later with a lot more cash, and that'd be really fun. But anyways, I digress. We have so much great content on this channel that I feel like you guys have what you need. That we put the content out there that we needed to, and that everything from here is just about developing that community around it, right? Really enjoyed your video on the gamma. Oh yeah, that one is really good. I kind of feel like it's old information now because all anybody talks about is the 0-day to expiration options, and I haven't made a video about that one because like I don't really have a good framework for how to use that to predict what the flows will be, because 0 days to expiration just kind of suggests that like you get these really crazy moves that make no sense, right? Do you think Bank of Canada? Well, I don't really know. You want me to guess? I'm gonna guess that the trend will continue and that the treasuries will move higher. That's my guess. Actually, I will make one thing. I think that JOLTS might be more important than the Bank of Canada. So let's just come back because we got a minute and a half. The estimate is 10.54 and the previous reading was 11 million. So I suspect that JOLTS job openings will come out closer to 10 than 10 and a half, and that the market will react to that. Will there be any? I don't think that it's as important as yesterday, but the market seems to care when he's talking about Congress a great deal. So you really need to be on your toes. I think it's a great opportunity to just like not trade, to be honest with you. I mean, the market probably will move and it'll be like silly moves that, you know, I don't know. I just don't like it. I don't like it. It's always a mess. Algo Bro is developing a Java machine learning algo that exploits profitable strategies until they're not profitable. I'd be really skeptical about how effective a strategy like that would be, and I would never want to do it in Java, but okay, that sounds interesting. Okay, so here's the poll. Here's the news.
Rate remains unchanged at 4 spot.
Bank of Canada is no change. Rate remains unchanged. Okay, JOLTS is higher than expected.
824 million, 10 spot 824 million, higher than the forecast of 10 spot 5455 million. Bank of Canada says the latest economic data remains in line with the bank's expectations that overall inflation will come down to around 3% in the middle of the year, and repeats that
somebody beat me to it.
Key rates at its current level, conditional on the economy developing broadly in line with its forecasts. The Bank of Canada's statement. The Bank of Canada reiterates that it's prepared to increase policy rate further if needed to return inflation to target. The labour market remains very tight, and employment growth has been surprisingly strong. Price increases for food and shelter remain high, causing continued hardship for Canadians. Restrictive monetary policy continues to weigh on household spending, and weak economic growth over the next couple of quarters means pressure in products and labour markets are expected to ease.
Okay, well, we moved down, so opposite of what the action from before was. There was a bit of a mess here. Shoot. Wowzer. That like all of a sudden collapsed real fast. Did you see? That was crazy. I was sitting there looking at 939 and thinking, well, I guess I could hit into that one at 186 that's sitting there. And then all of a sudden somebody just gobbled it all up all at once. Yeah, and there was a big market order in the 10-year and there was a big market order in the 5-year. It just whoosh. Now it kind of looks like it created a little bit of a hole, so they're doing a little bit of
low at 1 spot
middling around here, but I think that we're likely to see the lows here now. So that JOLTS jobs opening was 10.824. So that's why I'm kind of like, that's not good. Versus an expected 10.54. And the Bank of Canada decision was in line, so.
We did see some weakness in the S&P.
I guess not.
JOLTS data.
Well, the dollar went super high there off of that news too, but it's coming back. It kind of looks to me like once again the dollar is a super dominant force, and so like all of the pullbacks and so forth end up being a lot more dramatic than they otherwise would be, just based on the order flows because of the correlation with the dollar.
We have posted the full Bank of Canada rate statement and the US JOLTS job openings January 2023 full report on the feed for all those interested.
Okay, so there was a little bit of a turn in the dollar. We'll see.
US natural gas futures extend losses, prices down by 5%.
Oh, geez. Apparently, natural gas is down 5. Well, I got 3.5% on the day. That's the biggest loser right now. Biggest winner, copper, up 2%. Well, that's definitely not going the way that I wanted it to. Micros seem to be very sensitive at the moment. Is the only coding language you're allowed to use to write scripts on NinjaTrader C# or is there an API you can? So you can only use C#, but you could connect anything into it from C#, right? So I've seen some people that want to do machine learning in Python, and I've kind of toyed around with this, where you pass messages between C# and Python using a socket, right? So if you really want, you can do it in anything. But it's kind of like, at that point, why not just do everything in Python? Right? Bit of a fight at 10. 111.10 in the 10-year. Bid at 09.5. A little suspicious. Not bowling though. In fact, maybe even some pushback. Oh, nope, it's bowling now. Oh? And then 2 ticks up. Oh yeah, because it seemed like the dollar was going to turn back up, and it didn't. Okay, come on, we can get 09.5 to go offer. I'd feel a little bit better about this. Yes, sir. So should we call that bid at 09.5 a spoof or an aberration? I don't know. Hold though.
We have posted the live video to Fed's Powell.
Okay, we did get a price pivot in the dollar, so seems like things are reacting to that a little bit. It's crazy how ES popped right. Yeah, it is. I mean, it was a pretty dramatic move down, and they came back very, very quickly. But that's where, again, I'm saying the dollar has been like such a strong force. And like when it moves, it just makes these other things move so quickly. Like the amount of volume that it takes and all of that just goes through real quick. Okay. So back to the 07 point of control and below VWAP. I am seeing the volume start to turn back down to the downside in the treasury, so that's good. Do see the dollar starting to make some, recovery after a really, really big pullback. Who knows? Is it the Dixie causing it, or is it the other way around? I believe that it's the Dixie causing it. I couldn't prove that for sure, but the reason that I think that it's the Dixie causing it is because when we see those moves that are highly correlated, I don't see that much flow coming through in the treasury. Oh wait, you're asking something else. Is it the Dixie causing it, or the other way around? Other currencies wanting USD denominated assets? I don't know. I've never really thought to make that kind of a distinction, actually. When I'm saying that, I'm not saying that like traders in the Dixie are causing the markets to move per se. I'm just saying that there's a change in the dollar index and that other assets are reacting to their correlation to the dollar. I would say though that the euro reacted particularly strongly to that. Interesting. So some volume at 08. Well, I'm not still a little. So we have been getting some of the flows that I wanted. It looks like in this case, though, that the prices that I took were really poor. And it seems like the buy flows are a little bit stronger than I would have otherwise expected them to be. So like I kind of wonder if whatever it was that was prompting the buying from before the news is still kind of in force. I kind of thought that maybe they were front running that news, and so then when this turned out to be a sell, that would kind of cause it to sell harder. But so far that has not played out that way. We are getting a pretty strong like VWAP battle sort of thing going on here. We'll see if they can get through that 07 this time. It seems like there is some liquidity building on the outsides of this, so. And they're not hitting 07. Oh, I have totally forgot about that. I totally forgot about that. Let's go to C-SPAN.
To take this matter seriously and hold a hearing, but I'm still waiting for a response. I hope Republicans will listen today to the real consequences that even the mere threat of a default would have for everyone in this country. And finally,
Yeah, right.
that we're finally making
That was my first thought, was like, oh my gosh, like the first person I hear when I pull it up, it just had to be Maxine Waters. Ugh.
confirmation of Dr. Lisa Cook.
Did you see the whole Elizabeth Warren versus Powell thing yesterday? I felt that she made such a fool of herself yesterday, man.
Kansas City Fed president positions vacant.
Powell pushed back, and I think he made a good point. He was like, so you want us to just not do our job? You think people would be better off then? She didn't know how to respond to it. She just tried to push through with her pre-planned thing. I think it fell flat. Yeah, populist gonna. So like I spent a lot of time yesterday reading through Reddit comments, reading through TikTok comments on this, and people weren't buying it. Everybody was just saying, well, this is your fault. You're just trying to deflect blame. So I think that
long-term budget
I think it was a big fail for her.
sustainability of our debt, most recently released.
Okay.
Without objection, so ordered. I'll now recognize
That 07 is looking a little weaker, but there's still not very many orders hitting it.
for 1 minute.
Thank you, Mr. Chairman. And Chairman Powell, thank you for being here today to discuss the Federal Reserve's monetary policy actions in a time of economic uncertainty, mixed economic data, historic inflation that continues to plague families and businesses around the country. It is paramount that the Federal Reserve remain vigilant on reducing inflation, anchoring inflation expectations, and restoring price stability at the Fed's 2% target.
Okay, so were able to get through to 07,
Regulatory and
an
supervisory
average-sized
As the
cell.
Fed reviews the bank capital framework, it needs to consider the impact to the real economy and our global competitiveness.
A little pushback at 06
Raising
half.
capital requirements and sidelining capital would work at cross purposes with monetary tightening, constraining the supply side when we need more, not less, investment to fix supply chains and reduce inflation. Tailored regulations are required by the Fed.
There were a couple of questions that were a little bit more wonky stuff that were interesting.
To stick to its knitting and not attempt to be a climate regulator. I yield back.
Gentleman's time has expired. We'll now recognize the.
I think that some of these Congress members are way too concerned about the Federal Reserve doing climate change policy. Like, that's not what's going on. And I really think that they're overly triggered about it.
Financial Services Committee, just as the economy was about to collapse. And so that was my trial by fire, the emergency response to rescue the economy and the legislative response.
Only good questions came from Kennedy.
That successfully stabilized our financial system. So 15 years later, as I take my place as
The thing is I don't really remember a whole lot from yesterday anymore other than how dumb Elizabeth Warren was.
I swore to myself back then to make sure that this kind of calamity never happens again. The monetary policy report that we're receiving today is largely a narrative of a return to normal. And lead times to manufacturers are back to pre-COVID levels. The job market retains supernatural strength, and inflation is responding more or less as predicted to the usual measures.
So 07 was kind of a place where they were having a hard time getting through and they were getting pushed back. And now I did see pushback at 06, but what I'm seeing at 07 is just kind of going back and forth now. So things have kind of normalized back out.
Testimony of Jerome Powell, Chair of the Board of Governors of the Federal Reserve System. Chair Powell was reappointed and sworn in for a second four-year term as
There was a little bit of a slip to like 05 half, but it was very brief.
also serves as chairman of the Federal Open Markets Committee and the system's principal monetary policy making, which is the system's principal monetary policy making body. Chair Powell, we thank you for taking the time to be here.
So I feel like we're kind of at a decision point.
Your testimony without objection. Your written statement will be made part of the record. Chairman Powell, you're recognized.
Chairman McHenry, Ranking Member Waters, and other members of the committee.
Look at that.
And I
That was a
appreciate
very aggressive pushback at 06 half.
Federal Reserve Semi-Annual Monetary Policy Report. My colleagues and I are acutely aware that high inflation is causing significant hardship, and we're strongly committed to returning inflation to our 2% goal. Over the past year, we've taken forceful actions to tighten the stance of monetary policy. We've covered a lot of ground, and the full effects of our tightening so far are yet to be felt. Even so, we have more work to do. Our policy actions are guided by our dual mandate to promote maximum employment and stable prices. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of labor market conditions that benefit all. I will review the current economic situation before turning to monetary policy. The data from January on employment, consumer spending, manufacturing production, and inflation.
So I think that this is just supposed to be like just a replay of what he said yesterday to the Senate, right?
Reflects the unseasonably warm weather in January in much of the country. Still, the breadth of the reversal, along with the revisions to the previous quarter, suggest that inflationary pressures are running higher than expected at the time of our previous FOMC meeting. From a broader perspective, inflation has moderated.
It's like it's right on the edge there, but at the moment they don't want to go for the plunge.
2%. The 12-month change in total PCE prices has slowed from its peak of 7% in June to 5.4% in January, as energy prices have declined and supply chain bottlenecks have eased. Over the past 12 months, core PCE inflation, which excludes the volatile food and energy prices, was 4.7%. As supply chain bottlenecks have eased and restrained demand, inflation in the core goods sector has fallen. And while housing services inflation remains too high, the flattening out in rents evident in recently signed leases points to a deceleration in this component of inflation over the year ahead. That said, there is little sign of disinflation thus far in the category of core services excluding housing.
The moment I feel that I don't want to be in this trade, that it was a bad trade.
We will need to see lower inflation in this sector, and there will very likely be some softening in labor market conditions. Although nominal wage gains have slowed somewhat in recent months, they remain above what is consistent with 2% inflation and current trends in productivity. Strong wage growth is good for workers, but only if it's not eroded by inflation.
Well, I think that's it for me. I don't think I'm going to try another one there.
Rising at a below-trend pace of 0.9%.
I'm a little
Consumer spending appears
disappointed in how that worked out, but sometimes that does happen to you. And I was kind of hitting in pretty risky action, so I'm really mad that I just got such a bad price, right? Because I felt like it was going really well.
On business fixed investment. Despite the slowdown in growth, the labor market...
I felt like I had a good trade there, and it did not turn out that way, right? Like I thought that
its lowest levels
because the movement had been all up to that point, that it would make this sell really aggressive, and it held. So somebody's still buying it here for some reason. I don't know what's with that.
Unemployed individual, close to the all-time peak recorded last March, while unemployment insurance claims have remained near historic lows. Turning to monetary policy. With inflation well above our longer-run goal of 2% and with the labor market remaining extremely tight, the FOMC has continued to tighten the stance of monetary policy, raising interest rates by 4.5 percentage points over the past year. We continue to anticipate that ongoing increases in the target range for the federal funds rate will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive.
I don't think that my exit was very good either. I should have been able to get only -10.
Of significantly reducing the size of our balance sheet. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee slowed the pace of interest rate increases.
Nick Timmeros, according to the January JOLT survey, job openings have been little changed over the last 6 months. The ratio of job vacancies to unemployed workers has been hovering around 1.9.
Economic activity and inflation.
Look at that.
Although inflation has been moderating in recent months, the process of getting inflation back down to 2% has a long way to go and is likely to be bumpy. As I mentioned, the latest economic data have come in stronger than expected, which suggests that the ultimate...
even though I didn't do that very well, I'm sure glad that I got out when I did, because look at that.
And I stress that no decision has been made on this, but if the totality of the data were to indicate that faster tightening is warranted, we'd be prepared to increase the pace of rate.
Okay, so, interesting.
Restoring price
So that was a repeat of his statement that he said yesterday, but he put a different emphasis on it, saying, I'm not saying that we need to increase it, but we're saying we're prepared to do it if data came in saying that. Meaning that such data has not come in and that he didn't like the market's reaction yesterday.
price stability is essential to set the stage for achieving maximum employment and stable prices over the longer run.
And I think that that's why we had the reaction that we just did, a little bit higher.
Maturely loosening policy. We will stay the course until the job is done. To conclude, we understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission. We at the Federal Reserve will do everything we can to achieve our maximum employment and price stability goals. Thank you. I look forward to your questions.
Thank you, Chairman Powell. I'll now recognize myself for 5 minutes for the purposes of questioning. Chairman Powell, there's been a lot of discussion over the last 24 hours about the effect of rate increases on the economy, a lot of debate about what you said yesterday in the Senate. But no one asked you this directly. We have a March meeting coming up, Open Markets Committee meeting coming up in 2 weeks. How do you think about the March meeting? What's your approach to that? What are we likely to see?
Thank you. So I won't repeat what I just said in my testimony, but if I turn to the March meeting, I guess I would say that we have some potentially important data coming up, data to be analyzed. One of them came out at exactly.
Oh, wait a second.
That would be the JOLTS report, which of course I haven't seen, being sitting here.
Durr.
But we're also getting a jobs report on Friday and a CPI and PPI inflation report next week. So those will be important and we'll scrutinize them. When we say that we're going to be looking at the totality of the data, which is what
I had an order at 915 and I forgot that I turned my account back off, so I didn't get filled.
The economy and of our progress,
And it would have been a good take.
we'll be carefully analyzing them. Again, we have not made any decision about the March meeting. We're not going to do that until we see the additional data. The larger point, though, is that we're not on a preset path and that we will be guided by the incoming data and the evolving outlook.
But you've also said higher longer. Is that still the case?
Yeah, so, and as I said in my testimony, we look at the data.
I think that this is a dovish reversal of what we had yesterday. So yeah, I think you go long. Like I think here.
Higher than we'd expected.
And what are those economic factors?
So going back to January, as I mentioned, the softer inflation readings of November and December were revised up. We got a very strong inflation report for January. We got an extraordinarily strong employment report, very strong consumer spending, strong manufacturing data right across the board. And as I pointed out, some of that may have been affected by the very warm January weather.
No, this is really tense, but I do think that we're going to breach the highs.
Chair Powell, in January, the Federal Reserve.
No, it was a reversal of what he said yesterday.
Digital asset custody is permissible.
It was a reversal in tone. So he said the market reacted really strongly to him saying that we could increase the rate of increases based on the data, sort of a thing. The market really didn't like that. And so he changed his emphasis when he said that today, suggesting to me that he did not like the way that the market reacted to that.
Any scale. Are you aware of this step?
That's why I think that the market bought up there so aggressively after he said that.
Custodial services.
I am aware of it. Of course, it's an SEC accounting bill. This is SAB 121, I think. And
that's right.
I'm certainly aware of it, and we do follow.
It was more. Well, that's true too. Actually, you're not wrong.
Our capital regulation.
You're not wrong.
Without objection, I'll submit.
The market tends to read into really stupid things in these situations, doesn't it? Right.
So while the Fed says it can be done in a safe and sound manner, the Securities Exchange Commission is regulated.
But you're right. For those of us that are really following the Fed, I don't really feel like that there's really been any change.
Chair Barr has announced a holistic review of capital requirements. As I said in my opening statement, there are a lot of questions about this process, and previous statements by members of the Fed governors about the adequacy of current capital.
In a normal system, is it supposed to be that way? That seems more like theater to me. Well, it's all what drives orders, and this is a situation where the market seems to be overly sensitive.
At the governors, right. the board
level. So really what this comes down to is that your typical analyst, they see a move and they say, this means X.
we wanna
And
understand
so the
why
move
it's
happening kind of reinforces that something happened when
and what that
when the actual underlying fundamentals didn't actually do anything,
so,
right?
My general question is, do you still
This is not working.
agree with your previous statements about the adequacy on a generalized basis of our financial system? Or are we to read into this that we're not adequately capitalized and there's a high level of risk in the system that we're unaware of at this point?
Thank you. So the why really just is that as a new Vice Chair for Supervision, Vice Chair Barr has launched into, he's taking a fresh look at everything, including capital. That actually is typical of the last two people to have this job. So that makes a lot of sense. In terms of the process, it's certainly conducted under Vice Chair Barr's leadership with input from the staff and discussions with governors on that committee.
We should note that even though the market really moved up there, because again, it was like the dollar was the biggest driver, but the volume, like the cumulative delta in the 10-year didn't really shift.
Nothing has been formalized at this point. It's a lot.
So if we were to continue to push higher, you could probably get a lot of volume to do it,
we get to the place
but
where that's
it's not happening right now.
the board will be carefully briefed. Ultimately, we'll vote on a proposal.
Short everything if he sneezes, right?
And we'll solicit comment from any and all commenters, and we'll look very carefully at that. So it'll be a wide open process in the sunshine.
I'm kind of looking at this like, what am I doing? I hate this. I hate
Gentleman from
this
California, the
kind of
ranking
situation.
Ms. Waters.
Thank you very much. Chair Powell, I agree with what you said on
I don't think that he's going to say anything particularly important from here on out,
because
but I
what you
do think
described,
that there could be some more long volume here.
consequences of failing to do so. You or perhaps
I want to see him eat a sandwich.
on the debt limit, which is why I find it very concerning that your recommendation to raise in a timely manner is
Why am I getting
ignored by
those?
my colleagues on the other side of the aisle. I'm also concerned that the consequences of this brinksmanship are imminent. Fitch Ratings said this week they may seriously look at downgrading the U.S. debt based on the escalating brinksmanship they are observing, even if Congress ultimately addresses the debt limit at the last minute. This is history repeating itself. Standard & Poor's downgraded our debt back in 2011, when Republicans last controlled the House and threatened default. The Bipartisan Policy Center later found that the 2011 debt limit debate cost us $18.9 billion in higher borrowing costs, even though we never defaulted. To put that into perspective, that could have been leveraged to provide up to $200 billion in loans
Okay,
to small businesses,
that was weird.
Small Business Credit Initiative.
It was.
Thousands of people down payment assistance to buy their first home. So I want to emphasize that House Republicans, including most of the Republicans on this committee,
She's definitely one of those people that I'm like, why is she still allowed to? Is she really mentally capable to still be in office? She just, the way that she talks when she seems like she's too old.
to weather the pandemic and build back a strong recovery. Chair Powell, can you describe for us the risk?
Like,
If Congress continues.
I don't think she's drunk. I think that I think that she might be on some medications that kind of help her appear a little bit more
By saying
mentally sharp than she actually is,
really
you know?
fiscal policy, except I will limit myself to the two things that other Fed chairs have said about this. One is just that Congress raising the debt ceiling is really the only alternative. There are no rabbits in hats to be pulled out on this. Two really is just that no one should assume that the Fed can protect the economy from the non-payment of the government's bills, let alone a debt default of something of that nature, which we don't think will happen here, but no one should be thinking that.
I don't know what is I always thought that it must be they giving them stimulants or something.
Thank you very much. I don't want to miss what you said. I somewhat quoted you.
Somewhat
You
quoted
said
you?
that Congress must raise the debt limit because of what you described.
Breaking guy who lends money to government suggests raising debt ceiling.
Failing to do so. Is that your language?
Well, must in the sense that it's really the only way for the debt limit to be raised is Congress must act. Again,
Like, this exchange that's going on right here is exactly what I hate, though, right? Like, somebody asked him this exact same shit yesterday. So why is she asking it? Well, because she needs the soundbite to show to her constituents, to get on the news so that they can try and hold Republicans' feet to the fire.
Consequence of failing
Right?
to do so. Is that correct? Did I correctly quote you?
that's correct.
Thank you.
This whole exchange is happening for sound bites and not because it actually helps anyone.
Let me just go a little bit further. The chair mentioned that he had.
Yeah, quick raise the debt limit while interest rates are at 7%.
Some conversation from Janet Yellen about the time limits that she had attempted to describe. Is it your
I
understanding?
would have liked to have gotten
she
that other
said she
contract
could
at 10
maneuver
minutes. Well,
and kind of manipulate things so that she paid the bills that were coming due, but this could only last until about June. Is that your understanding?
Honestly, I would really have to not try to interpret the Secretary's words for you. That's really up to her to do.
Can she keep us afloat until about June?
For me to say these are really questions for the Secretary. I'm sorry, Ms. Waters.
Have you had any conversation
oh my gosh.
statement that she made about being able to manipulate the debt and pay bills that were coming due out of another account?
Sounds to me like you want to be interviewing the chairwoman, not.
That you and I have privately don't go anywhere. I don't talk about them with anybody. And the conversations I have with Secretary Yellen, I don't.
Okay, and I don't want to get you
Gentlelady,
in a-
time is expired.
Oh, snap. Oh my gosh.
He went over time.
If I
Oh.
I yield back.
Now recognize Vice Chair of the full committee, Mr. Hill of Arkansas.
Thank you, Mr. Chairman, and thank you, Chair Powell, for being.
That is the funniest exchange I've ever seen during one of these congressional testimonies, man. That was effing hilarious. Oh my gosh. Maxine Waters, come on. What is wrong? What is wrong with you?
The only priority of the Fed is price stability, because it's the legislative branch and the executive branch that really are responsible for
I would have given her more time if I was there.
environment and making sure that that's right. So your commitment to price stability is welcome
This is so funny.
by this committee. Yesterday in the Senate, you suggested
So by the way, the dollar is looking just awful here.
broadly
Isn't
regulatory
it?
framework for digital assets. Is that
So it looks like that's what's driving us, but the treasuries aren't really seeing the flow
a
still.
regulatory framework here in the United States for digital assets, that there'd be more transparency and rules of the road for both consumers, investors, and developers?
Absolutely.
And would it, if we had those rules of the road for business seeking to use and develop blockchain as a potential new technology in their business, and tokenized payments, that, again, that would be beneficial to business to know how to go about that?
Yes, and to assure that it's all done in a safe and sound manner when we're talking about banks.
Right. Come on. And then, my next point would be exactly that: to help banks, investment brokers, custodians understand how they could even participate in that market.
ZN hates that 15 so much, right?
Would help on that.
I really think that if the 10-year breaks highs again, that you could start to see quite a bit of long flow come in, but they're just not going for it, are they?
Work here in Congress over 100 years
There's
ago.
definitely some trapped traders that are trapped short, for sure, right? But they're just not,
Would you?
they're not pushing the
That
advantage.
regulatory framework would also have to preserve some sort of role, subject to safety and
Yeah,
soundness.
seller pukes for days, yeah.
States to play some role in that regulatory framework for digital assets.
Let me just say, I think that it certainly works in banking and insurance. I have no problem with those.
Right.
I'd have to
But
think
you
about,
you think it could, you consider it possible that it could also work in digital assets?
certainly possible.
Yeah. Thank you.
I mean, the thing is that the market maker is definitely not playing along with that, right? Like the market maker's not positioning himself for it to
breach there. They're absorbing against it.
Which money issuance to the Congress, and we've in turn delegated that to the U.S. Treasury, which has since 1912 engaged the Federal Reserve as their fiscal agent. You've testified here many times before that to issue a central bank digital currency that would
And I guess the other thing that we should consider is that
That is absolutely the case as it relates
we're
to
unlikely to get another serious catalyst at the moment.
forms of a wholesale CBDC that we need to look at. It's less clear. But we've always been talking about retail CBDC, and that's something we would certainly need congressional approval for.
And what would be a parameter on something that's not a retail CBDC where you think that could be issued in some form or fashion without Congress's direct statutory authorization?
It would be, for example, it would just be something between banks, so it would look an awful lot like a bank reserve. And you might ask, well, why would we need it? And that's a really good question too.
Yeah.
But just something that's literally within a wholesale market.
But that speaks that you might have a blockchain between banks and the Fed using a central bank digital currency token to settle transactions institutionally inside yeah.
Yes.
So that leads me to.
You waiting for the March 24th CN contract to become the front?
Running, I think, this summer, somewhat behind the scene there. I would like to ask you to formally have this full committee briefed on that by the Federal Reserve. I know the chair of the Kansas City Bank was involved. She's now left. And I think the committee has a lot of questions about FedNow, how its interoperability will work, how it's going to roll out. And also just a question that we've been asked, that why the Fed wire system isn't up 24 hours a day, 7 days a week now to benefit consumers that are using Venmo. Do you have a thought on that?
So there was a breach to the downside and a little bit of a stop run, I think.
On that, and we, of course, be delighted to come up and brief the committee on FedNow.
That'd be good. We'll take you up
Some
on
strong absorption at 09.5.
Fed. And Mr. Chairman, I yield back.
Gentleman yields back. We'll now recognize the
Dollar moving.
the ranking member of the Capital Markets Subcommittee, Mr. Sherman of California, for 5 minutes.
Thank you. Mr. Chairman, I want to thank you for bringing to our committee's attention several years ago the importance of tough legacy LIBOR, some $16 trillion of instruments where the creditor wouldn't know how much the debtor was supposed to pay. This committee, we passed legislation over a year before the LIBOR hit the fan. You issued regulations 7 months before the absolute deadline. I hope we do this in other areas, and it's my understanding that with those final regulations, we're done, and we've solved the LIBOR issue. Is that correct?
That's my understanding as well.
Good. People talk about inflation, and they somehow say that it's a matter of the personalities and politics in the United States. Others argue that the entire world is hit by inflation because Ukraine and COVID. I think we've got the answer to this question in that inflation is considerably higher in the Eurozone than it is in the United States today.
Is Congress really so dense that they don't understand that inflation can be impacted by numerous factors? Because I can list out like 6 different things that are affecting inflation right now.
If we solve the problem tomorrow, we had less investment than we would have had yesterday. And I would say that I commend the president. He's going to issue a budget.
Yeah, I'm just trying to sort. Did you see I tried to click out and I misclicked?
Budget plan will be released. We are all eagerly awaiting it. Housing is a huge part of inflation, and we've left it to local government, but the permitting process there guarantees scarcity.
Okay, there we go.
Guarantees high housing costs. Mr. Chair,
well, the damage wasn't too bad, but that was 2 very disappointing trades for me.
Before that, about wire fraud. And having just bought a home, I saw the process up front. Everybody's very nervous about one thing, and that is, will the buyer of the house be tricked into wiring their down payment to the wrong account? Or will the seller, the buyer be tricked into, or the escrow agent be tricked into sending the money to someone other than the seller of the property? We talked about this back in 2001, where I urged you with your FedNow system, which I'm glad is on track to move forward, to have what the Brits have. When you send the wire, you identify not only the number of the account you're sending it to, but also the name of the person or entity that's supposed to receive that. At that time, back in 2001, you said that payee matching is not the best way to do it. There are other ways to do it, and that you'd be happy to get back to me as to how you're going
You
to.
think that it's the market makers? I don't know.
An email from a Nigerian prince does not get the wired funds, particularly in a housing transaction, wired to an account number that turns out to be.
So when I come in and look at this on the chart, right, and you see the cumulative delta, like there was a huge buy on the equities open that who knows what that was. And then there was the 8 o'clock news. So the 8 o'clock news was correctly a sell, but since then, it's just, look, the volume has just gone sideways. Now we've moved up, and from everything that I can tell, that move up is driven largely from changes in the dollar. So you're right. It is the market makers are in charge right now. You're not actually getting other large meta orders pushing. I thought that we would get a large meta order pushing us up to 16, and it's not happening.
Every real estate transaction, we go back to the drawing boards, follow what the Brits have done, and have pay matching.
No, well, there was a couple of points there in the micros where there was some real volume and some strong takes and so forth, but
says what it means.
It actually turned out like the one that I took was like somebody hit something that I wanted to hit, and so I chased it, and then that was the end of the move.
Money laundering statutes to it,
so
it won't be crypto anymore. What crypto wants is to have part of its ecosystem above the waterline, visible and subject to know your customer, and then have the rest of the iceberg below the waterline.
That's absolutely right. That's exactly what they do.
I will now go to the gentleman from Texas, Mr. Sessions, is now recognized for 5 minutes.
Chairman McHenry, thank you very much. Chairman Powell, thank you for joining us today. We appreciate not only your professionalism, but your direction at us. Chairman Powell, I know that the Fed considers divergences, and you.
The bigger thing here is that especially in
about
the last
price index,
let's say the post-COVID era, the correlations are the most dominant factor.
And all these things are talked about in your.
Like the market makers are adjusting their bids and offers based on the correlations, and
2023. Thank you.
You know, we're not getting strong flows unless there's like news.
See that an economist, Arthur Laffer, produced a report that spoke about literally this country doubling GDP. Now, I know we're putting CPI, PCE, inflation, all these things into a mix. But he said that if we made changes in health care to efficiencies, we could double the current GDP rate. My question to you that I hope you can answer is, what do you think about that? Is that something that is in this document that I have missed?
That's not a question to ask the Federal Reserve President.
A person who follows this, as Art Laffer does for 50 years, what do you think is an important?
Dan Barnes asks, are issuers predicting a 6% federal funds rate?
That's not in our monetary policy report. I'll just say one thing, and that is we do spend something like 17 or 18 in that range percent of GDP delivering healthcare. Other similarly wealthy countries spend 10%. So it's the delivery system.
Interesting. Are we getting some spreading? Yes, we are.
The delivery system is very expensive.
Getting a flattener.
That's $1 trillion a year that we spend and get nothing for it. This is fiscal policy.
Well, it's too late for me to try and take another trade off of this, but
if we had a delivery system that
we are getting a little bit
$1 trillion that doesn't really
more of a downside flow now.
Then that would be great for the economy, which I would agree with.
So you've spoken of supply chain.
Let's flatten out this market making thing in ZN.
Is an inhibitor.
That was a disaster.
Accelerator as we gain that advantage. You just talked about some seemingly which would offer some validation to Mr. Laffer as he spoke about the huge importance of this. Is that something you should start paying attention to where policy people, not only at the Fed, but your Fed banks around the country would start
Powell needs a different panel to interview him, like Bezos and Musk. That would be funny.
to gain those?
That would be interesting. Somebody should put that together.
So on supply chains generally, they have suddenly been tremendously important in inflation, as you know, for the last couple of years, and for the first time really have been something that we've had to study carefully. In terms of healthcare delivery, that is strictly a question for you and for the parts of the government that are charged with it. The Fed does not have a role to play and does not seek a role in that.
Does not see a role. And yet, as I look at this, you've got a role in projecting confidence. You've got a role in education. You've got a role in who's in the workplace. You've got a role. Interest rates, and yet my point is, it's such a staggering number that impacts us. Just love to have you go back. Perhaps we from this committee need to give you.
Well, I'm sure that if Bezos and Musk were asking questions, that they would make just as much a fool of themselves.
Staggering impact on that. I don't think it's political. The answer may be political, but I think the actual numbers are not political.
I think buy this,
it's
man.
An inefficiency is happening across the country, not a regional matter. And so I wanted to get your take on that, and I appreciate
I still think if I was to swing trade, I still think that my opinion is the same that it was at the beginning of the day today, which is that interest rates are going to go higher.
Ranking member of the Agriculture Committee.
Now doesn't appear to be the best time,
very much,
but the market maker seems to be very much in charge, but somebody's selling it.
Chairman. Now,
It could be the case that whatever was the buying that was kind of pushing us, that it's all done and over with.
I think we're on the verge of making a terrible mistake. Back in 2008, if you recall, Barney Frank then and Miss Waters asked me to take a look
Barney Frank.
and kind of work with you and the Fed.
That guy used to drive me crazy.
In 2008. And we came to the conclusion that we needed a more equitable playing field between our large banks,
Yeah.
like Goldman Sachs,
The way he spoke, I was like, how did anybody get in an office
smaller banks,
with
Truist,
speech like that? I never was like, what was the deal with?
and we changed that. But now I hear that the Fed and the FDIC plan to drop a new rule which seeks to apply the long-term and higher capital requirements that were created, and you and I did this back in 2008, and you remember, that were created for the Goldman Sachs and for them. And now we want to apply these rules to the regional.
Is there something behind the way he speaks? Is that like a... I'm sitting here thinking about it like, did Barney Frank have a speech impediment or something? What was with that?
I think it's very misguided.
It's funny that the reserve requirement ratio is still 0.
Worked on this. You recall this. You were a board member. And we saw that we needed to have
9.3
a better
would have been good.
playing field to protect. And if you all go along with this, it could put many of our regional banks and small community banks out of business. So I want you.
So this is around the point where earlier I kind of had a long, right? And we couldn't get below this. They just refused to hold below 07.
Smaller and regional banks under the same heavy or financial load.
And like the market maker positioning is all balancing back out here too. So if the market maker continues to be dominant, we should see a bounce here.
To address the different size and risk characteristics.
But there does appear there could be a large meta order sell going through here.
They won't have anything like what the very large, most systemically important banks have in terms of overall regulation.
Yeah, because I remember clearly you and I were back. I think we were on this side.
No, because that's not the purpose of this panel, right?
Committee room.
The purpose of this panel is, I think, twofold. Number one, for Congress to exercise oversight, their oversight responsibilities on the Federal Reserve. So to ask questions and make sure they understand what's going on at the Federal Reserve. And second of all, to consult with the Federal Reserve about the policy that they make and what would be the best, most line and useful things for them to do. So what business leaders believe about things isn't really a factor here, right?
And we're doing this. Dodd-Frank actually required us, suggested that we should tailor, and then the S2155 then required.
You see, what you're saying suggests to me that you think the purpose of this meeting is to grill Chairman Powell and possibly try and make the Federal Reserve look bad in the eyes of the public. And you might think that because the politicians are always doing everything they can to make as big of a splash, right?
Yeah, that's right.
All right, good. Now let me turn to China. I'm really worried about China, and right now people may.
But it's a consultation between them and Congress, so why would it make sense to have somebody that's not in Congress?
Purchasing power. Now, at our last meeting,
it's not evenly matched. Right, but this is my whole complaint is it's not supposed to be a match between them, right? And these guys are not on opposite sides of things, right? They're all on the same team.
Time's expired. We'll now
right? But this should be about how do we have the best economic policy and monetary policy, right?
Standards. One of those things we've discussed many times together. As you know, commodity markets have seen significant volatility in the last few years. And during times of tremendous economic uncertainty.
Yep, that's exactly why I think it's not just the United States, it's everywhere around the world, is that the 24-hour news cycle, has become so extreme with the internet that politicians are constantly on stage now. And so you can't actually have those kinds of thoughtful, like this meeting would be more productive if it wasn't televised.
Can I go look at that?
Because then Congress wouldn't have this incentive to say things and ask questions just to get sound bites.
And that particular response makes me feel better, because after all, those products are very important to my folks. And make a great deal of difference in how they're able to address their issues. So, as you discussed earlier, and as you've consistently assured, the Fed's not a climate-making policymaker. You and I have talked about this issue, again, many times in the past. However, I'm concerned that the Fed could be heading in that direction and could be laying the groundwork for climate-related stress.
Well, they're switching back up here.
For entire sectors of the economy. This would
but now they're at
the Federal Reserve, potentially to political
the other side of the market maker average position.
Make policy decisions related to climate change. We've seen, for example, this administration turn to regulators to impose climate policy as an alternative to the legislative process. Chairman Powell, how careful are you in ensuring that the Fed does not place itself into the climate debate? And how can Congress...
Then how would you know how your representatives are actually doing at their jobs? They would not be appreciated?
Shall we say warped into creating...
Well, but that's kind of the whole thing, Vig, is that
I think we do.
I don't think that any of this really does tell you how they're doing, right? The reality of it is that it's very difficult for a person to really make a informed decision about how well their congressman is performing without being there in Congress yourself.
Where we're actually becoming a climate
You know?
policymaker. I would completely agree with you, though, that over time,
Like the whole reason that we do the representative thing is because we, the public, just don't have the time and energy to be informed enough to be able to really.
It's a very important.
That's why we hire people to do it for us.
Traditional production agriculture,
Right.
oil and gas, and the actions that the Fed takes have a significant
So
impact.
what happens is it used to be that a congressman's incentive was to make the correct decision.
And with that,
right?
I'll you back the balance of my time. Mr.
Make the correct decision. Go in there and study the facts, and based on the facts, make the correct decision.
Recognized for 5 minutes.
Now, with the incentive of the internet behind you, their incentive is to do whatever their constituents will like to get them reelected, and that's resulting in a lot of bad decisions.
Regularly with leaders from the Fed and from the White House to discuss a possible CBDC, central bank digital currency, and other payment innovations. In the statement, it was mentioned, and I'll quote from it, it said that the Fed is encouraged to provide periodic public...
I feel better that I only took 2 trades today, because on other days it might have been a lot worse. I think that those losers were a little bit worse than I would have liked, but
First of all, when...
not too much damage was done. I am kind of looking back on this, though, that I could have just said, we're not going to touch it. We really could have. I think that would have been the right decision because it's just been a mess. And it does really seem like the market makers are in control. I think that it was okay that we took a trade. I think it was okay that we took a trade because we did have some reason to think that orders were going to come in certain directions, right? But it was a little bit on the edge, and in the end, that ended up being the wrong decision.
Boston
So
Fed has a partnership there, the Hamilton project.
I don't know if we learned something from that or not, because sometimes it just happens, you know?
But
Anyways,
it says here...
I will see you guys tomorrow. I think that Thursday and Friday could yield more opportunities for us. So see you guys then. And in the meantime, stay excellent.